Hi guys, today I'm going to give a quick and brief overview on the different types of investments. I've noticed that clients often get confused about what type of investment to use when and what's better for them in their circumstances. Broadly speaking, there are really only 4 or 5 categories of investments. You get discretionary investments, that I'm going to run through quickly. Those are investments that don't have their own internal tax treatment. They are investments in your name as an individual, which means that from a tax perspective, you will pay all the income tax, all the capital gains taxes, and any dividends tax in your own name. Things like that are direct share investments, investments in unit trusts directly, or flexible or discretionary investment plans. If any of you have heard those terms or have seen those on your investment statements and you get an ITB certificate, that is from discretionary investments. The second category that I'd like to chat about is endowments. Endowments are typically investments that are for a 5-year or longer period. An endowment is a product that pays out completely tax-free in your hands, but it has its own internal tax rate. Now that tax rate can be beneficial to you if you're a high income taxpayer, or it can actually be to your detriment if you're a low income taxpayer. I find endowments are generally missold or misused in the industry. Too many endowments get sold, to my personal opinion, because the internal tax rate on endowments is 30% on income and about 12% on capital gains. Now, very few individuals, if you work out their average rate of tax, not their tax bracket, but the average rate of tax, are paying 30% income. So for me, a simple solution is endowments work well for trusts and high tax individuals, but not for the average Joe on the street. The third category of product is retirement annuities. These are great investments. And the way a retirement annuity works is you put money into it, and for the contribution that you make up to a certain cap, you actually get a tax deduction. So you get 2 forms of return on a retirement annuity. You get the tax deduction, which is money that you could be investing again, and you get the actual growth on the investment itself. Now, the other advantage of a retirement annuity is that internally, while the money is invested, it is not taxed, which means that between an endowment and a retirement annuity that are invested in the same fund, the retirement annuity over the same period of time will end up with a much higher fund value. The difference comes in the treatment of the money coming out of the retirement annuity. You are partially taxed on lump sums coming out of a retirement annuity, and you are taxed on your pay-as-you-earn scales on the income that you get from a retirement annuity. Please watch our video regarding retirement annuities for a full explanation on how retirement annuities work. The very last category, which would be the 4th category of product, is tax-free savings accounts. Tax-free savings accounts are also wonderful investments. Every person should have at least one and be using it to its full maximum contribution limit every year. Tax-free savings accounts don't give you a benefit going into them, but like a retirement annuity, once the money is invested, there is no income tax, no dividends tax, and no capital gains taxes. So you get the benefit of tax-free growth internally, the same as on a retirement annuity. And when it pays out, there's no taxes. So you get the tax-free exit that you normally get on endowment. Now, these investments sound too good to be true. Yes, the government will not give all of its tax money away. They cap you on how much you can contribute to a tax-free savings account, and currently that's about 33,000 Rand a year, with a lifetime limit of 500,000 Rand in a lifetime. But there's no cap on how large these investments can grow internally. Typically, the best use of these types of products are your retirement annuity with a tax-free savings account, where your tax savings from your retirement annuity go into your tax-free savings account. And at retirement, those 2 investments together should be viewed as the value you derived from contributing to your retirement annuity. Thank you very much.